The markets are collapsing right now. The S&P is down, the Nasdaq is down, the Dow Jones is down, Google's down, Microsoft is down, everything is down. All the gains that we made since the election are almost wiped out now. And everyone is blaming Trump. So has Trump destroyed everyone's portfolio, or is something else going on? So the biggest news going around right now are Trump's tariffs. Tariffs on Mexico and Canada and China. Tariffs on China are probably like one of the biggest ones. So these tariffs are apparently to address concerns of illegal drugs being trafficked into the US and China failing to control the trafficking of fentanyl into the US, and they are, I think, the only producer of it, so they basically get the blame for all that. And these tariffs are also meant to boost domestic industry and manufacturing to overall improve the American economy. But these sudden tariffs that just came out of nowhere sort of have just shocked the market, and there's been like sell-offs everywhere. So investor sentiment is down because they fear that this is all going to result in a recession, and stocks that are heavily involved in international trade have been hit hard as well by these tariffs, by the talk of these tariffs, because obviously they will be like a premium on everything they import, and then there will be a premium price for the consumer to pay, which makes less people be able to afford it. And historically, the Smoot-Hawley Tariff Act of 1930, which imposed high tariffs on imports, is widely believed to have exacerbated the Great Depression by reducing international trade. So what could be the motives for Trump to implement these tariffs? Well, it could be a strategic negotiation tool to renegotiate trade deals in favor of the US. And as we said, to revitalize domestic industry and manufacturing, making foreign goods more expensive to encourage people to buy their own product. But I'm not sure how that would work, because I think the local goods would probably be more expensive even after a markup is set on things from China, for example. No one can really match China on prices, and even India to some extent. And then there are also perspectives that these tariffs could also be a way of him fulfilling what he basically promises when he's getting elected. So things that would make people who vote for him happy, that this is in favor of what they wanted or voted for example. Having these tariffs for the long term would basically slow down the economy and reduce consumer spending, and then other countries might take retaliatory measures, so like as revenge, put their own tariffs and their own restrictions against America, which will just make international trade more difficult and more limited. But historically, markets do rebound from anything that gets thrown at them, whether it's tariffs, whether it's a Great Depression, whether it's a war, whether it's whatever. But what if there's more to this than we can see? So what if this fear is being artificially made into the market, and the talks of tariffs are coming like so abruptly to make things crash in order to give buying opportunities to investors? Because I mean, the market has been going up a lot. It's gone up a lot. It needs to correct, or like you need some volatility, you need some up and down movement so that you can make money in the market, so that you can buy at a good price and then sell later at a better price. So what if this is kind of a plan to make stocks go down so that investors can buy at better prices, and then when things get cleared up, the market can go back up. Then simultaneously, while there are some geopolitical tensions around the world, some people might turn to gold as a hedge against any geopolitical concerns, such as a war breaking out. If it was to break out, stocks going up would usually mean that gold goes down a little bit. So when stocks go up, people could buy gold and have this bunch of gold now in case of a war, for example. And then during the war period, the gold goes up and up and up. Obviously, this would have to be like perfectly timed, but if it was perfectly timed, hypothetically, they could sell this gold at like the peak, and then after the war, all that cash from the gold, use it to buy stocks in listing companies again. It sounds a bit far-fetched and a bit like a long plan, and I'm not saying this is like Trump's plan or something, but I'm just saying how things could sort of work out like this, because there are some geopolitical tensions. There's the Israel and Palestine thing, there's Ukraine and Russia, there's tension within the UK and within Europe about like their own, like whatever's going on in their own countries, so you never know what could happen. But either way, I've seen many times that during the year the stocks go down and stuff for any reason. This time it's Trump's tariffs, maybe. Other years it's other things. But usually by around like Q4 time, November, October, usually everything starts going up again. So honestly, like I expect the market to be fine by November. Obviously I could be wrong. Maybe it won't be fine, but I think it will, and I think right now it's probably just another buying opportunity. It's not every day that you see like the S&P down 5%. And don't forget, what's been proven statistically is that buying consistently, regardless of what's going on, produces better, if not extremely similar results to timing the market, or usually produces better results than timing the market. But during more uncertain times, gold might not be a bad hedge. There's a couple ETFs for physical gold that a couple people have told me about. One of them is PHYS, like Fizz. Sprott Physical Gold Trust. So this is, from what I've heard, is like owning physical gold for those of you who can't figure out how to buy like actual physical gold. And there is another one called, what's it, IAU? Yeah, iShares Gold Trust. So this is also like owning physical gold. So you can do this or buy physical gold to have along with your stocks. I think you should always, in my opinion, your portfolio should have some gold, you know, like let's say 5% of your portfolio can be gold or less, but you should have some gold. It's a nice thing, and I've talked about it in other videos before, but it's like, it's nice to have it, and it's like, and because if you buy it physical, if you buy physical gold, you also don't see it like as a number on your screen and stuff like that, so it might be like a thing that you just keep somewhere and you forget about it, and then one day you might need it and you remember, oh yeah, I have like gold. You never know when that might come in handy. Times like this really test you to see how your anti-panic selling skills are. I think Trump is good for business and good for investment and good for the stock market, and he usually is. So I'd be very surprised if he just comes and crashes everything and leaves. I'm pretty sure he has something up his sleeve to sort everything out later on. Just have to trust the process. Warren Buffett's sitting on 300 billion cash. I guess maybe he's just waiting for like the absolute like bottom of this to start buying. Gold is at like all-time highs right now, but it's still not too bad to just start nibbling on it a little bit, buying a little bit here and there. So yeah, from where I'm sitting, it looks like it's shopping time. That's all for this video. Please make sure you like and comment and subscribe and let me know your thoughts below, and I'll see you in the next video.